Hey everybody, it's me, Gregory Mannarino, back for my lovely, very lovely, a lot of stuff I want to talk about here today. It's important post-market wrap-up for today, Wednesday, June 27th, 2018. Finally, that's all I'm going to say here. Finally, the Confederacy of Dunces is being forced, did you watch this today, to address the issue of the yield curve and a possible yield curve inversion, which looks extremely likely. Well, you've known about it for how long? How many of you, with a show of hands, get your hand up, remember me or recall me speaking about this yield curve from like years ago? Well, it's starting to rear its ugly head, and that's what drove this market sell-off today. Let's recap some of this. Earlier today, the video that I did earlier today, I explained to you bonds were being bought up literally off the Richter scale, and I mean that. If you had a look at the chart, I'm sure your eyeballs exploded. You can still see this on my website, traderschoice.net, link in the description of this video. This was pushing stocks higher. Now, the yield curve issue, I cannot over stress how important this is, and it's finally, I mean, I can't even believe it, getting coverage on the Confederacy of Dunces. They're concerned about it. The financial sector took a hit again. It's all about the yield curve here. How many times, a show of hands again, have you heard this guy explain to you that it's all about the bond market, which is in the biggest bubble that has ever been created in the history of the world? The stock market today, the Dow Jones Industrial Average, made a 450-point swing today. It was up like 300 at one point, down 150 at the close. It's huge. And again, it's being driven by fear now. Finally, I mean seriously, freaking finally, that we have a problem here. Houston, we have a problem. There's no doubt about it. Look, the Federal Reserve has created a monster of epic proportions. I mean, beyond the imagination that anyone can possibly realize by doing what they have done now for an entire decade, suppressing interest rates artificially, not allowing the market to determine fair value for debt, has caused distortions across the spectrum of asset classes. And I'm not making this up or pulling it out of a hat. Unlike we have ever seen in the history of the world, it's going to rear its ugly head here. Now, I'm not saying it's going to happen right now, but I can promise you that if the Confederacy of Dunces is going to be forced to start talking about the yield curve and how it's affecting the financials, I mean, look, I've been bringing this up for so long that all of you out here that follow my work are probably super experts. It's the truth. And we all understand that there's going to be a moment where this all normalizes, where this corrects the fair value. Did you see what they did to silver today? It got pounded. Gold got pounded. The dollar is higher. Crude oil put on over 2.5%. Look, all of this is a mess, and it's going to achieve a fair value at one point. Don't know when, don't care when. It's really the truth, but we know it's coming. And I found it, and I'm sure you did too, if you were watching this, the Confederacy over there, that they're now having no choice but to address the issue of the yield curve and a possible inversion. Well, that inversion is going to happen. The Federal Reserve, I don't care what they're trying to tell you, has lost control here. They have no choice but to get in here, keep those rates suppressed, buy bonds. That's who's doing this. You all know that. And it's just incredible. I know I'm getting ahead of myself here, but today's market action, look, you cannot have it both ways. How many times have you heard me say that? Both hands up. They can't continue to distort this market by suppressing interest rates and expect there not to be a terrible price to pay for what's going on here. Look, for all we know, they're going to find a way to prop this up again because they're going to try to do that at least through the midterms here. President Trump wants and needs this market higher. It is a distraction of epic proportions here. We continue to get round after round after round of economic news that's being ignored. And, you know, that it's not as great as we're being double fist fed. But as long as that stock market keeps moving up, wow, the drones that walk the street here, people that cannot walk and chew gum at the same time, believe that that everything is just fine. Anyway, people, very interesting today. You know, let me just say this as well. When I started talking about a yield curve inversion, and I think I started doing this before anybody else, I got laughed at, ridiculed. I mean, you name it. By websites and people who think they understand these markets, but now it's becoming real. Where are they all now? Where are all the trolls? Hello? What a bunch of idiots. All right, look, everyone. We will reconvene tomorrow, and tomorrow is going to be super lovely. I can promise you that. Bye.